Hi, good afternoon, everyone. So welcome to Phillip Trading Podcast, and we are happy that today we have William with us. So how do you do, William?
Very good. Thank you, James. How are you?
Yeah, great. Okay. Yeah. So last week we did discuss about the industrial metal, right, which is the silver and copper. Okay. So now we are going to discuss about Malaysia market. Okay. So the topic for today's will be is KLCI index reflecting Malaysia real economic environment. Okay. So William, first questions to you. How do you think is our Malaysia economy nowadays or right now?
Okay, the Department of Statistics Malaysia, which is usually they compound all these statistics, they have just announced our Malaysia Q4 2020 GDP 2 weeks ago. Okay, so in the last quarter, in 2020, like how the last quarter, our GDP actually dropped 3.4%, and on annual basis, our GDP dropped 5.6%. So this drop of 5.6% is actually the worst since the Asian financial crisis in 1998. So if you just look at the GDP, of course, our economy definitely doesn't look good because it's a drop and it's the worst after the financial crisis. However, if you do realize that Malaysia is actually a country that very dependent on a few of the commodities. The first one will be the oil. The second one will be the palm oil. Okay, and also we also very dependent on manufacturing sectors. Manufacturing actually contribute about 24%, which is almost a quarter of our Malaysian GDP. So based on the three items that I mentioned, so we will start at oil. So oil price is currently actually recovering very well. Okay, and the price is already higher than the price is actually higher than the price before the pre-COVID level. Next, we will look at the palm oil. Okay, Malaysia is the second largest oil palm company in oil palm producing country in Malaysia in the world. Okay, so CPO price is currently at 10 years new high, which I reckon is actually very good for our country because when the companies are making more money, they are actually paying higher taxes. Okay, so lastly is the manufacturing. If you look at the quarter reports that has been released by the listed companies under these industrial sectors, okay, I would say that 70% of them actually they have pretty good earnings. They have very good earnings and it's actually higher than the pre-COVID level. So and semiconductor and metal companies are actually doing like extremely well recently. If you look at the earnings report, okay, and they have a lot of huge order book. So with the vaccines coming in, the industrial is actually doing really well. I reckon that the outlook is actually quite optimistic, and it's very likely for our life to go back in the next 6 months. So overall, I think actually the GDP doesn't really reflect the new the index or the GDP doesn't really reflect what is upcoming. Okay, yeah.
I see. Yeah. Thanks for sharing, William. Because I agree with you, because then like what you just shared just now, all the things are quite positive to Malaysia. Okay. So what are the factors that cause our KLCI index is sideway to turn to like downtrend? Okay. In your opinion, is there any chance for FQI to like try and turn back to uptrend?
Uh, if you look at the component stocks, okay, if you look at the component stocks, the 30 stocks that are related to the KLCI index, I reckon that the main reason our index is not really performing that well is because of the heavy selling pressure on growth-related stocks. So if you look at Hata, Top Growth, or Supermax, these three companies are actually currently in a downtrend. And if you look at the volume, the selling volume is actually very high, which means I believe there are some institutional is disposing and they don't finish disposing in 1 or 2 days. Okay, so I guess the smart money in the growth is now actually shifting their money to a recovery stocks or to sectors that are very strong with very bright outlook like technology related. Okay, I think once the selling pressure on the growth are finished, we should be able to see our KLCI to rebound. Okay, and yeah, and FKI, the futures, will definitely follow. So if you look at banking, we have P metal. Okay, banking P metal is also index related stocks. Okay, all these stocks P metal has been trading at 52 weeks high or historical new high, which is benefit for our index. And for all the banking, actually, if you look at the chart purely on chart, actually they are actually brewing for an uptrend. So I believe that if nothing significant like a black swan event, I believe the banking should perform in the next couple of weeks. Okay, and for tourism related stocks that are linked to our KLCI, which is Genting and Genting Malaysia, I believe they will have a very good rebound in the upcoming few months, okay, which is going to benefit our KLCI index as well. So overall, I think to conclude, as long as the selling pressure on growth are done, our KLCI should see some lights now, okay, for it to go up.
Okay, yeah, I see. I believe that everyone will also hope that the vaccine is effective, then also can bring very good news to, and also a good impact to our country. So hope that everything will go back to the normal and also recover. Okay, so if the index is not performing, so does that mean there are no opportunity in our Malaysia equities market?
Okay, so for me personally, I monitor the market. Okay, I can feel that economy is actually doing quite well and coming back to life, especially the industrial and technology related sectors. Okay, and not just the share price is doing well, the earnings is doing really well. Okay, so don't get affected or conned by our benchmark index, which is KLCI. They are really not reflecting our real economic condition. But no matter, because if you do realize that in every economic cycle, no matter what kind of condition it is, there are always companies that will benefit from it. Be it in a downturn, even in a downturn, there are certain like COVID growth is benefiting from it, you see. So no matter which economic condition, there is always companies that will benefit out of it. So our job as an investor, it is our job to really discover this group of companies that will benefit from that particular economic condition, and we try to invest in them. Okay, so yeah, I disagree that there is no opportunity. There is always opportunities because there are always a group of companies can benefit from the current market condition.
I see. Yeah, I totally agree with you, William. So, like what you mentioned just now, every market, every situation's got the benefit or got the chances to let the investor to have a chance to get or earn in the market. Okay, so what are the top 3 sectors that investors should focus in our Malaysia stock market right now?
Okay. In my own opinion, the top 3 sectors I reckon will be the first will definitely be the semiconductors. Okay. The second will be the metal-related companies. The third will be the oil and gas related companies. So if you read the news, you should be able to notice that, okay, semiconductors, they are on serious, very, very serious shortage globally, okay, and it's actually, this shortage has caused a lot of big companies of the automobile companies like Ford, General Motors, they are the leading companies in the world to cut the production, okay, even in the US President Joe Biden is actually even coming out to voice out to solve the issue. Okay, so other than this, our whole global economic cycle right now is actually moving into a 5G network and also on the electronic vehicle era. So I reckon that the demand on semiconductor moving forward will be really high. Okay, now next, if you look at the quarter report of metal, just now I mentioned about metal also, okay, right? Most of the metal company, they are actually, because if you do realize most of the metal companies, usually they have very, very slim profit margin. So when the market is not performing or when the market is not in this kind of company's favor, they usually lose money. They will report negative earnings. But now, all these companies, they are reporting higher profit margin, higher earnings, higher revenue. So with this, I reckon that the demand of all these metal in China has come back, okay, and all the commodities prices have skyrocketed, okay, and this include oil and gas, okay, the crude oil price. So like I mentioned in the very beginning, our Malaysia, we very depend on oil and gas, and yeah, when the price is recovering, I believe it should bring our oil and gas stocks to go up as well. So other than these 3 sectors, there are one last sectors that I reckon that should really benefit from the current market condition, which is the recovery team companies, okay, like Genting Malaysia, Genting Airport, like the BS company, Heineken, Carlsberg, etc., etc. So all these Asia, all these related, although you can't see their earnings immediately, but do remember that market is always trading ahead of the real earnings, okay? So just try to keep alert, and whenever you are ready for it, just plan ahead and be positioned in it. Okay, so if you want to trade all these stocks with our company, Phillip Futures, you can actually find out, PM us and know more about how our Phillip CFD works. Okay, yeah.
Okay. Yeah. Okay. Appreciate your time, William, to share about your knowledge and market view with us. Okay. Yeah, we really like pray hard that vaccines will bring a good effect to our body and able to let our humans life go back to normal. Okay. Yeah. So thank you very much, William. Thanks for your time to having a session with us. Okay, so guys, so if you are looking at this our podcast, right? So to subscribe our YouTube channel and also subscribe our Facebook page also. So we will update our podcast every Monday at 2 p.m. Okay, so you're also able to share our podcast in your own personal Facebook page. Okay, to let all your friends to know more about market and also learn about market. All right. So we'll call it a day, William.
Okay, thank you, James. See you
Okay, thank
next
you,
week.
William.
Okay,
Thank you very
bye.
much. Bye bye.